Assalamualaikum. My name is Ashikin binti GHAZALI. My metric number is 2019231132. Now I'm going to present about the benefits and function of insurance. Okay, in this video, I will talk about introduction, functions of insurance, benefits of insurance, and conclusion. Okay, so what is insurance? Insurance is an agreement whereby a group of individuals facing similar risks can share the fortuitous losses of the unlucky few by the transfer of such risks to the insurer who agree to compensate the losses. Let us first understand the ways insurance works to compensate for the financial losses consequent to the occurrence of a risk or peril. Insurance works because the insurer can collect from a group of individuals in similar circumstances, not all of whom will suffer losses in any one year. These premiums are then put together and used by the insurer to pay losses. Losses are then shared out among the policyholders rather than borne solely by the unlucky few. Next, I will proceed to explain about the functions of insurance. There are three functions of insurance, which is primary functions, secondary functions, and indirect functions. I will explain about the primary function of insurance first. The primary function of insurance is to act as a risk of transfer mechanism through insurance. Individual, business enterprises, public authorities, or association can transfer the financial consequences of risk to the insurer in return for paying a premium. Next is secondary function of insurance. Secondary functions can release funds otherwise tied up in reserve. Through the purchase of insurance, business enterprises and individuals are able to avoid the necessity of freezing capital to provide financial protection against losses. The fund release would be available for investment. Next, secondary function also can stimulate business enterprise. It facilitates financing of property by banks and other financial institutions. It also can facilitate overseas trade. Next is to reduce fear and worry, reduce losses, encourage saving, and offer social benefits. Okay, lastly is indirect function of insurance. Indirect functions of insurance consist of investment of funds, which insurer accumulate large funds which they hold as custodian, out of which claims are met. These funds are usually invested in the public or private sector. Next is invincible export. Insurance can contribute considerably to a country's balance of payment as an invincible export. For example, while Britain is a net exporter of insurance, Malaysia is net importer of insurance. Lastly is the source of employment. The insurance industry in Malaysia has generated numerous employment opportunities through the creation of jobs such as underwriter, claim officer, and loss adjustment. Next, I will explain about the benefits of insurance. The existence of a sound insurance market is an essential component of any successful economy, and the proof of this can be seen in many parts of the world. So we are going to discuss about the benefits of insurance. The first one is peace of mind. The knowledge that insurance exists to meet the financial consequences of certain risks provides some peace of mind for the insured. This is important for private individuals when they insure their car, house, and other possessions. But it is also a vital importance in industry and commerce. Buying insurance will allow the entrepreneur to transfer at least some of the risk of being in business to an insurer. Next is loss of control. In a practical way, buyers of insurance will normally come into contract with the loss control services offered by an insurer when they meet the surveyor. Many insurers employ specialist surveyor in fire, security, liability, and other types of risks. Others will employ people with broader but less detail and knowledge. So the process will require a very quick action after a loss in order to assess the factor accurately and to take steps to minimize further loss. Next is investment of fund. Insurance companies have at their disposal large amount of money. This arises due to the fact that there is a time gap between the receipt of a premium and the payment of a claim. An insurer will have the accumulated premiums of all insured over a long period of time. Lastly, invisible earnings. In a modern economy, we import goods which our people need, and by the same token, we export goods which other people want to buy. Where these goods are tangible, a visible trade exists. So the goods remains visible, but the principle remains the same. In conclusion, a person and his or her family or property are exposed to different kinds of risks. Risks lead in potential losses. Therefore, in the context of risk management, insurance is designed as a tool which reduces the cost of loss or effect of loss caused by a variety of risks. Insurance accumulated funds to meet individual losses. It is not a device to prevent the occurrence of unwanted events or cause of loss, but it protects against that loss by compensating the losses. The basic concept of insurance, the functions and the benefits were spelled out to give readers a better understanding of why some risks are not insurable and must fulfill the characteristic of insurable risks. Thank you. That's all from me.